this video, I will share with you all of your Tesla stock breaking news today. We will also take a look at the technicals and what happened on Friday. You actually seen a large recovery into the end of the day, and from a technical perspective, it was exactly what we wanted to see, with support being held at this trend line. First and foremost, Deutsche Bank has raised their Tesla price target to $420 from $370 while maintaining a buy rating. They say, quote, Tesla's valuation is now clearly embedding a higher degree of success for robotaxi based on our multi-model framework. Tesla's FSD version 13 shows significant improvements, and a robotaxi service deployment in California and Texas is anticipated in the second or third quarter on the back of its AI capabilities. I think the true upside for Tesla stock is, yes, launching robotaxi in Texas and California this year, as previously outlined, but potentially launching in other states as well, maybe Arizona, like in Phoenix, where Waymo is already operational, perhaps in Florida, where Waymo is coming to Miami pretty soon. A few other states would really push the momentum higher for Tesla, and I think that's a big question I have for this year. Are we going to get more than 2 states? If we do, that is a completely different ball game than what we're currently expecting. Even though if we get 2 states, robotaxi launch in general, that's really good, that's positive. But if we get a faster than expected launch, then that's way better. I personally think with deregulation and the news that we have already gotten that President-elect Trump, soon to be President Trump, is going to roll back some of the procedure headwinds to actually getting autonomous vehicles on roadways. In other words, some of that sweet deregulation could be coming, and it could benefit Tesla in 2025. In other Tesla news today, Tesla has raised the price of all Model Y variants in Canada by $1,000, removing them from eligibility for the federal $5,000 IZEV rebate. Now, some people say this is because of positive or strong demand in Canada, and other people say this is just getting ready for the new Model Y to raise prices so you're not seeing a reduction of price when they launch the Model Y or the refreshed Model Y that just launched in China. I'm not exactly sure. Perhaps it's a combination of both. But either way, raising prices is good for margins, and Wall Street should like that, even though Canada is a smaller market. Elon Musk responds and reposts this post from Sawyer Merritt, and it's really this article from the Dallas Morning News. Elon Musk reposts this and says, cool, where this columnist titles this article with, quote, with thanks to Toyota, I moved on from Lexus to a Tesla. Without reading the whole thing here, he says he got a referral code worth $1,000 from a friend's son. He looked for a vehicle in inventory, and he found one in Houston. He says, bottom line, driving my EV cost about 2.5 cents a mile if I am home charging. That's about half the cost of running a Camry hybrid that gets nearly 50 miles per gallon on regular gasoline. And Fortune magazine, back couple days ago, it looks like, posted Elon Musk is pushing to remove dates from X post and planning a new $8 sign-up fee. Apparently, this was written due to a false post that this editor, Callie Hayes, seen on X. And, well, she says that this article was wrong, that she was wrong for making this article. So finally, someone actually holding themselves accountable for the, fake publishing that gets done in regards to Tesla and Elon. Tesla is deploying mobile superchargers powered by Megapacks in select areas to help any EV owner impacted by the LA fires with free Wi-Fi via Starlink as well. Tesla says the bottom rear seat cushions in the new Model Y are 0.6 inches longer for improved comfort versus the old Model Y, with the rear headrests that are also 0.7 inches wider versus the old Model Y. Over on StockTwits here today on this Saturday afternoon, sentiment is bullish at 69. It seems like over this weekend, the bulls are actually coming out, whereas we normally see a sentiment drop over the weekends. This preliminary data for this upcoming week is a good sign. You want to see people that are all bulled up over this weekend. That could translate into a strong next week. Again, versus sentiment that normally plummets over the weekend. Message volume is actually increasing over this weekend too, which is pretty abnormal. You're coming in at normal at 48. Yesterday, you were low at 44, and the participation ratio today is high at 55. Tesla is currently running about 4,000 different ads with Google, and we can see Tesla's global inventory numbers have recently shot up quite a bit. So the Model Y is now at 7,600 vehicles in total global inventory, the Model X at 4,500, the Model 3 at 4,700, and the Model S at 2,500. And we kind of seen inventory numbers plummet into the end of 2024, into the end of Q4. And we did see Tesla running down the inventory. So this does look pretty accurate. And it could suggest that there is more production now taking place with your Tesla models. Google Trends data for the Cybertruck has recently skyrocketed. I think this probably has to do with the Cybertruck that blew up in Las Vegas. This is Google Trends data specifically for the United States. And well, even though that was a bad thing that happened, it was a bad article, bad headline, it did skyrocket the attention around the Cybertruck. Also skyrocketing is the Model Y that went from 15 to 21. Now keep in mind, these are all relative to each other. So when the Cybertruck skyrockets like it did, it makes the other numbers look a little bit lower than they otherwise, would be. But the Model Y did go up 6 points. So that looks pretty good. The Model 3 actually dropped from 12 down to 10, so that's not as good. Model S dropped from 6 to 5. Model X actually dropped from 5 to 4. This is pretty damn common after Q4. You tend to see an end of the year, deliveries push, and then Q1 tends to be on the weaker side. If you look at worldwide search trend data for Tesla, this is interesting. The Cybertruck, same thing, skyrocketed to 100. But look at the Model Y. Went from 23 to 38. This, I would imagine, has to do with the new Model Y that just launched over in China. And if this is any sign of what demand could look like for this new product, well, it's the fastest rise in the Model Y we have seen in a very long time. I can't recall the last time you've seen Model Y search trend activity just skyrocket like we're seeing now. So odds are Q1 could actually be pretty good based on some of these Google Trends data points. Now, also in the news today, Trump is planning 100 executive orders starting day one on border and other priorities. Now, we don't know exactly what this will be. It says here on border security, deportations, and a rush of other policy priorities. This could mean tariffs, okay? Now, if it does, then we won't have to wait as long to get the bad news. And honestly, at this point, as long as we're not hit with like a 50% China tariff, it may just be seen as good news. Like a 10% blanket tariff may just be seen as positive because it's not as bad as feared. So around January 20th, oh boy, things are really going to start getting crazy. Now, option activity for Tesla stock on Friday was quite positive. You had 118 different trades totaling $92.63 million with a positive order value of 67%. As far as volume for Friday's option activity, you had 56.72% call volume and 34.28% put volume. So that looks pretty good. And short sellers on Friday covered about 175,000 shares that they were previously short in Tesla. So that's a good sign as well that short sellers are taking this opportunity as Tesla is down over 20% from its all-time high to cover on some short positions. Now, it's not a mass exodus. They're not rushing out the door of Tesla short positions. But I do think after we get the tariff news, after markets most likely buy the news on that, as long as it's nothing more dramatic or more extreme than we think, that's when you could see more short covering activity. That's when you could see a bigger move for Tesla stock. Now, short interest of free float sits at 2.88%. You have $31.84 billion sold short in Tesla, totaling 80.58 million shares that are currently sold short. Now, as I have also explained in previous videos, when markets are as bearish as they are today, you normally want to be buying the dip, okay? CNN's Fear and Greed Index is at 27, almost an extreme fear. Okay, as long as we're not starting a new bear market, this is probably a good buying opportunity. Just going to go out on a limb and say that. Anytime you've bought markets historically when they're in almost extreme greed and in extreme greed or in the low percentage of fear, you've made money. You've done well for yourself. And normally markets come back pretty sharply after they are this negative. Not a guarantee that they will again, but a good chance that they will. Now, on Friday, you kind of seen a flush out of markets. Percent of stocks trading above their 50-day moving average fell 6%, but it actually fell 17.5%. So the actual number here fell from, let's see, a high of 42% on January 6th down to 28% by the end of the week. Okay, from Monday, you went from 42% at the high of stocks trading above their 50-day moving average to close the week at 28%. Yikes. That's a big move. Okay. Now, 28% of stocks trading above their 50-day moving average is 72% of stocks that are in an active decline. Less than 50% of stocks are trading above their 200-day moving average. You don't really see that ever during bull markets. The last time you've been that low was 18 months ago. Okay. And anytime you're this negative, it's always a good buying opportunity. The correction back in April, we were this low. On August 5th, we didn't even get this low. We got down to 31% of stocks trading above the 50-day moving average. So like you're more bearish now than you were on August 5th. When the S&P, well, the NASDAQ at one point was down over 6%. You ended up closing down still 3%. But from peak to trough by August 5th, the S&P was down about 9.86%. So you are in an even worse downtrend now than you were then. Okay. So normally when things are this bad, you want to be buying. Same is true with the AI Investor Sentiment Survey, something I've covered here on this channel a lot. You now have more bearish investors than bullish investors. Bearish investors at 37.4%, neutral investors at 28.0%, and bullish investors at 34.7%. Now, I do see some encouraging signs when I look at the technicals, especially for the S&P and for Tesla. When you look at the S&P, look at this. You got this big low wick candle here that bounced right at the 100-day moving average. Okay, technically right above it. So your 100-day moving average on Friday closed at $578.51. The S&P hit $578.56 per share. So it stayed 5 cents above the 100-day moving average. So technically you did not fall below this at all on Friday. You bounced right at that level and you retraced back up to about 580 to close the day. Now, in after hours, you fell a little bit back down to 579.76. This was because of a stronger than expected jobs report. 56,000 jobs were added. and the unemployment rate actually fell. What a lot of people don't realize is yes, a strong labor market can amplify inflation if there is inflation. The two things that cause inflation in the modern era that have really only ever caused inflation is too much government spending, which, yes, is still going on. But the big thing is supply disruptions, supply chain issues. That's what really causes inflation. Now, you could say the port strike, if that happens on January 15th, is a big issue. And yeah, then we have a bigger inflation issue at that point. But unless that happens, I don't see the supply dynamic here that would cause another big round of inflation. So overall, as long as Trump tariff policies are not too extreme, I think the S&P wants to hold this 100-day moving average. If we don't, then we have a much bigger problem on our hands. Then we're going to fall back to that 200-day moving average if you break below this 100-day moving average, and that's down to about 552. That would put a peak to trough decline on the S&P of about 9%. So, we've been here before. We've seen declines like this before. But that'd be the biggest fall we've seen since at least August. And back in August, we immediately bounced from that. So if we didn't immediately bounce from a 9% drawdown, that would be an issue. And a lot of the pressure that is being put on our markets right now, on Tesla stock, on markets broadly, is the rise in 10-year Treasury yields, now sitting at 4.76%, up 8 basis points on Friday. This was a new 52-week high. The higher these yields go, the higher the risk-free return gets, the more inflation that is being priced in. But the less appetizing, if you will, it is to take on risk in our markets. And that's why it pressure stocks, because if you can get almost 5% risk free, why are you going to take risk in other areas that may be vulnerable to headlines, may be vulnerable to slower growth or upsets, right? 5% is not a terrible yield for people that just want to preserve their money. Over the course of 10 years, you're going to get 50% of your return, 50% returns, plus your money back. That is not a terrible proposition. Now, when Treasury yields are 3%, stocks are a little bit more attractive than when Treasury yields are almost 5%. Then you only get 30% back over the course of 10 years. The S&P should easily do more than that, do better than that. But 50% when there's all these risks out there, or close to 50% back over the course of 10 years, it could look pretty good to some people with high valuations, with a market that is up over 20% for 2 years in a row. So you see why this really does start to pressure equities. Now, the equities that do impress on growth, that do continue to excel, I think will get most of the attention, will get most of the capital. And I still think 2025 is the year of AI application, okay? The biggest AI appliers are going to be the biggest winners in 2025. I think a lot of these are going to end up being software names. I think Tesla is going to be the biggest winner of 2025 from that perspective. Tesla will be the biggest AI applier of this year and probably your entire life. That's why I'm still pretty bullish on Tesla. I acknowledge the risks out there. If inflation does move higher, if Trump tariffs are a problem, and they're going to have to be really aggressive to be a problem at this point because Wall Street is expecting the worst out of tariffs. Or if the economy slows too much, these are going to be issues that will pressure Tesla. The 3 big negatives for 2025, or possible negatives, again, extreme Trump tariffs leading to a trade war, the economy slowing too much or slowing into recession, or number 3, inflation spiking, causing the Fed to need to raise rates or something along those lines would be a big problem. So those are the 3 risks. Now for Tesla on Friday, you held support at this trend line, which is a great sign. You hit a low of the day of about $377 per share or so. You bounce back up to close near the high. This looks like a hammer candlestick to me. The sellers got exhausted. The buyers stepped in and took over, pushed the stock higher into the end of the day. These kind of candles usually bode well for a recovery. Doesn't always have to be a recovery, but it usually bodes well for a recovery. Now, next week we have CPI, we have a lot of other things that are going to be coming out as far as economic data, and that's going to be important for Tesla. Now, Tesla's RSI is at 48.75, so you're even below the neutral level of 50, so things are pretty negative in Tesla compared to where they were. And the MACD has been plummeting recently. The MACD line is at 7.55, signal line at 16.68. If we could start to get a bottoming coming in for Tesla, which it looks like we've kind of been doing over the past couple of days, the MACD can start to level out and maybe even reverse to the upside, and a break above the blue signal line would be great news. Now, to the upside, you want to get above 425, which sounds like we're really far away from that, but in all reality, that is only about a 7.5% move from here. A break above that 20-day moving average sets you up to some larger upside, but we'll talk about a potential breakout in Tesla in depth in the next video. That comes out at 8 p.m. Eastern Standard Time tonight, so stay tuned to the channel for that one. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.